morning. Good morning, everybody. Thank you for coming this morning with a very, very big snow in Paris. No, I'm joking, a bit outside. Thank you, Jonathan. Thank you, Thomas, for being there this morning. I know you have a very, very tight agenda, so we'll keep it sharp, 25 minutes. I will begin by something a bit strange for people of your level, but just ask you to present yourself and present your company. We have people from all over the world here. Sometimes they need a bit of a reminder. So I let you.
Very good. Well, thank you. It's a pleasure to be here. My name is Jonathan Larsen, and I work for a company called Ping An, based in China. And my job at Ping An is to be the Chief Innovation Officer for the company. And I also run a fund called the Ping An Global Voyager Fund, which is a $1 billion corporate venture capital fund that invests in fintech and digital health on a global basis. My own background very quickly is I spent 18 years at Citigroup, the last 4.5 of which I was running their global retail bank. And I joined Ping An about 1 year and 9 months ago. Ping An itself is, I think, a really interesting and unique company. It's the only large non-government controlled financial institution in China. The scale is extraordinary. We have 180 million financial services customers. We have about 500 million digital users. Our origin and to some extent the financial core of the company is still our insurance business, P&C and life, but we have a bank, we have a big asset management operation, leasing, we have a big securities firm. We're the largest online retail broker in China. The company is profitable. It'll probably make somewhere in the range of $16 billion of net income when we disclose for our full year last year. And we have a $1 trillion balance sheet. But I think what makes Ping An interesting, in addition to its scale, is the way it's embraced technology. I think, to my knowledge, it's the only large-scale financial institution in the world that is all cloud. And so about 6 years ago, the company made a decision to get rid of all legacy platforms and move to an entirely consistent cloud-based platform and to re-architect all of its technologies upon that. Secondly, it's deeply invested in automation across all of its businesses. So as an example, we have 1.5 million life insurance agents, 1.4, sorry, million life insurance agents. And the life of our agent is entirely driven by a mobile platform. You're recruited online on a mobile, you're trained, your client CRM is all driven by online tools that allow you to build social networks and allow content to be delivered to those networks in relevant ways for customers and prospects using AI engines that target very precisely what's going to be interesting for different customers. In our auto insurance business, if you have a small accident, what you do is you take your phone out and you scan the damage, and we can assess that using an AI engine instantly, and we can even offer you a cash settlement on the spot and give you the money into your e-wallet, and we're done, as an example. In addition to automating what we have, Ping An has been really successful in building new generation businesses. So you might have heard of a company called Lufax, which today is the largest digital wealth management platform in the world. So that was created by Ping An about 5.5 years ago from nothing. It now has about $60 billion of wealth management assets under management, and it's also a lending platform. So we've made just under $60 billion. We have a portfolio of about $60 billion worth of loans. It's entirely digital. And we just did a Series C round, actually, because we have outside shareholders in this platform as well. And the platform was valued at about $38 billion. And the last one I'll tell you about is a company called Good Doctor. So it's our telemedicine practice. It's the largest of its kind in the world. It has now about 250 million registered users. And what it really does is it does everything that a GP does in primary healthcare that doesn't require face-to-face contact. And we think it can be a very important part of the future of the China healthcare system, and can help China actually leapfrog from being a capacity-constrained, physically oriented model to a virtual one. And the last thing I'll say very quickly is our view of the future is we are in a data economy. And we can talk about this more, but we believe in ecosystems. We believe in the horizontal expandability of technologies, particularly
Keep
AI-based.
a bit for my questions, please.
So we'll leave it there. So, but that's very much part of our vision for the company.
So Thomas, could you tell us a bit more about AXA Group? And by the way, I ask you directly the first question which is, and the change in the last 2 years since you took over as the chairman of the group.
Yes, exactly. So I'm Thomas Buberl, CEO of the AXA Group for the last 2.5 years. I always have to think because it seems much longer since we have gone certainly also through a deep transformation. AXA is about a $100 billion company in terms of revenue, present in 64 markets, and we are probably the most diversified international insurance group. We work on all kinds of issues, from insuring cars to insuring very large enterprise risks, to reinsuring enterprise risks, to asset management, so across all different sectors. And over the last 2 years, we have gone on a very massive transformation journey with a view, where do we need to go and where do we need to develop insurance? And I think we are quite aligned with Jonathan where the world is going. Our view is that if you are an insurer and if you focus yourself just on paying claims, which is our core activity, it's not enough. We need to go beyond. We want to, also help our customers in their daily lives to prevent claims. And what we've done for that, first, we have shifted completely our portfolio. We used to be 80% life and savings. We are now 80% technical risks, which are risks, commercial risks, so insuring companies, health and protection. But those are the risks where you have a much more natural and frequent interaction with the customer. In the next phase now, we are building services to these customers. So telemedicine, as Jonathan mentioned, is also one of our areas where we have already grown quite a presence. We want to roll everything out now. Another area is, for example, cyber risk consulting, cyber insurance for companies, or if you take another part, which is vertical integration. In emerging markets, you don't have medical infrastructure. We are building primary clinics in order to create medical infrastructure. So it goes beyond just paying claims.
Thank you. So you were there 2 years ago. Thank you very much. When you arrived as group chairman, we discussed already of your plan to transform the company digitally also. Could you, in such a big group, after 2 years and a half, as you mentioned, what are the key subjects around digital transformation?
Look, I mean, when people talk about digital, they often mix things up, because for many people, digital is, okay, I'm turning paper into screen. And digital for us is a means to an end and not a strategy by itself. And obviously, in a very large group that is not yet fully cloud, that has a long history over 200 years, you first of all have to deal with a lot of legacy. And so the question is really, how can digital help you to get order and simplify your legacy? Because we have plenty of applications, we have plenty of areas where the customer data sits, and to say, look, how can you start the cloud journey, both public and private? How can you consolidate your IT landscape? How can you create a master data management where the data of the customer sits in one place and not in plenty places? And how can you then start really smoothing and automating the journey for customers and make it easier for customers? That's exactly the journey we have gone. And now, as I said earlier, putting on top the engagement piece with the customer is for us a big leverage, because in the past, we always send our agents to the customers, and obviously for small visits, for small pieces of insurance, they rightly said to us, look, it makes no sense to go. With digital means, we have a very different way of interacting, a very much smoother way, and also we can interact on a much more frequent basis.
Okay, that's the plan. But what are the key challenges you are facing to apply the plan?
That's not only the plan, that is also the implementation now, but you're absolutely right. The challenges are large. They start first with the customers and also with the agents. So if you have agents that have been serving these customers in a very physical way, to convince those agents and also to convince the customer that digital is an enrichment of the relationship and not a threat to the relationship with the agent, that is often the first step. And I remember in some of the countries where we started these discussions, we had very violent discussions because agents were worried and fearful of their own future. When I think back of the last agent congress that I attended in France in autumn last year, there was a much more constructive discussion and to say, look, what can we do to even accelerate? So that's number one. I think number two is also internally the resistance. If you are in 64 countries and we have a model of empowered local entities, everybody wants to reinvent the world they want to see it. And so you end up in a place where you have 4, 5, 6, 7, 8, 9 times the same thing developed. So how do you make sure that you canalize that and that you also then take 1, 2, or 3 ideas and roll them out on a global scale? And those are very deep and difficult topics that also go a lot with the culture, and therefore the element of culture development is for me the most important one, to make people work, to make them glue together, because at the end of the day, it's very difficult to sit here in Paris and control everything in 64 countries. You need to have a culture where you are aligned, and you need to come to a point where you have alignment without control.
When I proposed you to join for this morning, you told me, I don't want to be alone on stage, I want to share the stage with Ping An. Why so? Just because you are a friend, or you have something in mind?
We are certainly, we have been meeting, I think, a year and something ago, not even a year ago, and we were also on a panel together, and we saw that it was a meeting in Mainz. And why was I thinking it's important to bring Jonathan and Ping An here? Because when you talk about innovation, everybody says, oh yeah, have you booked your flight to Silicon Valley already? And I think it is, we are missing a lot by only focusing on the US. Yes, the US is very important, but when you look today at China, when you look at Israel, you see that in particular in China, the innovation has really leapfrogged. And when you look where is the most important place today for innovation in fintech, it is clearly in China. Ping An is a very good example because you transformed, I would say, an old business into a technology environment with an insurance appendix, if I may say so. But there's also many other examples. I mean, you have Zhong'an in China, which you also co-built, which is one of the very first insurtech working very much in the small insurance on a fully digital model. You have all the other large giants like Alibaba, like Baidu, like Tencent, that are really also working in insurance, in particular also in health. And so China, for me, is a very important place to go. And when we did our last board trip, we did not go to the US. We went to China, and we had a look what is going on there. And we are very active in China. We are the biggest foreign insurer in China. It's important also to meet your colleagues, to exchange, and to learn from each other.
I can't agree more with you to prepare this event. I'm doing many times the world tour. And definitely, it's not anymore in the US that they are in advance. China and globally in Asia, in fact. Jonathan, you already presented a bit the company, but when you sent me the slide deck, I must say that I didn't want to present it because we could do 1 day of presentation of figures. It's quite incredible, but just could you give us a few things? How many engineers in this company, which is more a tech company with an insurance appendix, as just say Thomas?
So we, the way we count it is we have a certain technology complement required to run the businesses, and then we have a certain amount of discretionary R&D. So we're actually heading very close to 30,000 R&D engineers, of which I think we're getting quite close towards 1,000 AI professionals, I mean real AI, deep AI professionals. And we're spending about, this last year, 18, we spent about $1.5 billion on pure R&D for the company.
By the way, just I ask it, I don't know if the slides you send me are public, but if they can find that somewhere, it's just so instructive and you understand more what you say. You can tell us if we can share later on.
Sure.
How many patents a year?
So so patents is interesting. I mean, the Chinese government encourages innovative companies to file patents. So I don't think Chinese patents are necessarily equal to a US patent or whatever. And they tend to have the decay curve is a bit sharper in China, to be realistic. We use patents for 2 reasons. One is we want to export technology over time, and it's very important that we have documented IP for that. But secondly, we are extremely sensitive. There's a lot of misunderstanding in China about whether international IP is used or misused, whether companies are paying proper license fees to companies who provide that IP from all over the world. We absolutely behave exactly like AXA would behave or any other company would behave in terms of meeting license obligations. When we create technology, it's very important for us to document that as well as part of our persona as a global citizen who actually is both a user and a creator of IP. So we have about 10,000 patents outstanding right now. They're probably creating 1,500, 2,000 a year.
So
like that,
going to data, insurance is managing risk. Risk is data. Can you tell us a bit more? I mean, we all know that we have different geographies, different rules. Yesterday with Mrs. Lagarde and with Mr. Carlos Torres Villa and also with BPC CEO Mr. Romignon, plenty of time the debates come back to data. What we can do, what we should do, what we could do, and also, privacy and so on. Could you give us a bit more, just to give us a touch of that, figures again? I've understood, but correct me if I'm wrong, that you've got in your database almost 1 billion people, 26,000 data fields, and an average of 3,300 data field per person. Is that right figures?
Well, and I think this is expanding. So there's a few things to say about data. I think that, first of all, there's another set of misunderstandings around the data landscape in China. China published, it's available in English in very clear text on the web, a data ordinance, data privacy ordinance in March last year. It derives from exactly the same source, which is the OECD data privacy guidelines that the GDPR framework derives from, and actually in intent and substance is extremely similar. So China is very much moving to implement a very consistent framework for data protection. It's going to take longer, and enforcement may not be quite where it needs to be. It will take some time. I think the big companies like ourselves or like Tencent, Ali are extremely conscious of where this thing goes. And we've all seen what's happened to companies like Facebook, who have been caught on the back foot and haven't got their story straight. So we're very sensitive to that. In terms of data, so the one you're referring to is we automated our personal lending. We're the largest. We have a big bank, but we also have a large non-bank personal lending platform, and we're the largest non-bank personal lender in China. And we completely digitized that business. A byproduct of that was creating, firstly, a credit model that encompassed all of the data we had and all of the data we could get about a customer. And secondly, and there are very specific limitations, like the government credit bureau in China only covers banks. It doesn't cover any other sectors. So you could have a loan with PBO, with Bank of China. You might be current with that loan. You might have 10 loans with P2P providers that are delinquent. Obviously, we can't make a credit decision just based on the bureau data. So we have to find often very creative ways of getting customers to give us all their data that we need to make a decision. The byproduct of that was that we ended up with a very robust credit database. We use about 6,400 variables in total, and we found that it was actually scalable way beyond our business. So people like HSBC or Standard Chartered are our clients. We're finding even the big Chinese banks are our clients. We have about 300 medium-sized banks who use this database. The consequence of all of that, of course, we protect each bank's data. We certainly don't look at the individual customer data, but we are able to abstract and apply the inferences from a pool of now almost 900 million customers that sit in this database. And we think that gives us about a 20% lift in credit performance and ability to predict risk than we would have if we simply relied on our own data.
Thomas, even listening what you said, Jonathan, on the fact that rules are also strict in China, we all know that it's complex in all geographies sometimes to just add one single data set, just regulatory or IT speaking. Are you jealous?
Well, yes, I can be jealous, but it doesn't get me very far because if I'm so jealous, I would have to move the company to China, which is out of the question. We are operating in a different environment here, and it's either you fit into the environment and get used to it, or you're out of business. Nevertheless, I think we also often use our environment as a big excuse not to do anything. And I believe Europe has been at the forefront of data regulation with the GDPR. I think it's very good and very audacious what Europe has done. But now it's up to us to say, look, how can we work in this framework? And I think there's a lot more that can be done. So, for example, we always try and think, can we create more data? First question is, have we leveraged all the data we have? And certainly, as an insurer, I can say we have not yet leveraged all the data we have. And second question is there not also a way of combining data on an anonymous basis across sectors to understand what can we learn more about the customer? And we have never tried this, and I would really like to spend some more time to see how can we use the existing data that is available to better serve the customers, because we will come into some areas of social tension where we probably need more data. If we take the healthcare example again, the healthcare cost in Europe is increasing 3-4 times the GDP. Affordability is going down every year. And if we want to provide a healthcare system for many, many people, we need the collaboration of the customer, of the patient, with data in order to manage it better.
So a lot of things to be done again on that field. Jonathan, Ping An is not only an insurer, it's a full range of ecosystem. You just mentioned that a bit with financial services, healthcare, real estate, and so on. Could you tell us a bit more how you leverage businesses and technology between those ecosystems? And in the same question, and all that in 2 minutes, how you build that as in a platform mode?
Yeah, absolutely. So, look, the first thing is that the way we see the world is that many industries traditionally were defined by their distribution systems. You'd go to a bookshop to buy a book. You would go to a video store to buy a video, or a cinema, to take some simple examples. You'd go to a big box retailer or a department store to buy something. Many of those systems have been replaced by digital platforms that are sort of universally accessible. Even where you're still going to buy a car from a car dealer, but nowadays you're going to make most of your decision and do most of your evaluation online, and you're going to use online tools to do that. We see a shift to creating this digital layer that it either replaces or it sits on top of pretty much every distribution system in almost every service industry. And we see the same capabilities for authentication, for decision support, for chat robots, for example. We now have chat robots where you can have a 5-10 minute conversation and you have no idea you're talking to a computer. These capabilities, we're just at the beginning, and they're massively powerful. They will develop exponentially, and they are highly horizontally scalable. One example for us is we own the largest auto sales website in China, and we now sell financial services into that, but we're also building a data business around it. We have 20 verticals in the government sector, because we're finding that municipal governments in China, and it's the same everywhere, they now care about the digital interface with their consumers. When was the last time you interfaced with a government service and experienced how terrible their online capabilities are? They want to be as slick as Amazon or as Ping An or as Alibaba, and they want to know exactly who they're dealing with. They want that to be seamless. So we're finding we have all of these services that can scale very easily into these sectors. And we see a world where there's going to be a relatively small number of companies that define these technologies and are able to scale them. And it doesn't necessarily mean we will be in all of those businesses, but we will be a major part of the value delivery in those businesses. And so that's a big piece of our vision for how we transition from being a finance-first company to being a technology company.
Thank you. Thomas, as a conclusion of this panel, my question will be, what the Ping An example give you as ideas of development scenario for AXA? Being platform, ecosystems, data, everything we just mentioned.
I think it is a very good learning example for us, and I think for many competitors as well, on a couple of dimensions. The first one is courage and a clear vision. When you look at Ping An, and Jonathan, you haven't spoken about it, but Ping An has got a very, I would say, a very strong founder, a very visionary founder, Peter Ma, who has had the courage of making choices very early and also when the choices failed, of saying, look, I stop and I try again. I think that element of courage is very important. Second element, I think, is the element of discipline in the implementation. Many ideas are good, and in Europe we often have many ideas, but at the end of the day, as my first boss in my life always used to say, it's all about implementation. And so this, not having the perfect solution, but having it up and running is the most important thing. And I think thirdly, to then go beyond insurance, and nobody else has really done it, and say, look, I'm switching my model. I want to become a service provider with an insurance appendix, if I may use the word. And this service is also open to third parties, not just for me, it's open to everybody else. And that is a logic that is very new in our industry. And I think those are three things, amongst many others, where we can all learn from.
Yeah, I didn't mention Peter Maher, but being a founder-led company in this respect makes an enormous difference. And if you think of the Apples or the Amazons, frankly, even AXA, which was reinvented as a company 35 years ago by a very strong visionary founder, I think that's a very important ingredient in what we're talking about.
Thank you so much. It will have to be our conclusion word. Thank you again for coming. You can applaud the panel.